Everybody, I'm Ed Parcaut here with Bobby Atkins.
Good morning, Ed.
Hey, so we've changed ours to more of the Veterans Edition, where we're going to talk more about VA stuff during this live on twice a week.
Yeah.
I'm just telling everybody else, not just you. I just thought we talked about so much stuff on veterans when you come on, we might as well make it a veteran show.
Yeah. No, I think it's a very specific niche that you and I specialize in. So,
right. And then you can just forward this to your group.
Yeah.
You follow me? And or we can eventually make it to where we go live in your group.
Yeah, we got to change that.
Well, you have to add that in.
I know. I think it's because I can only have so many locations.
Well, yes, but I can give
away.
up one of mine. I can potentially.
Well, thank you, Ed.
Yeah, it takes it away. But anyway, we're so this Thursday I had Rotary. We had a veteran talking because my year for Rotary is to help veteran organizations in town and what's going on. And this guy he was in the Marine Corps for 10 years and then did something stupid and went to prison for 23 and created a program to help veterans. Because a lot of veterans who go to prison, it's the same thing as the PTSD is causing, that they would maybe do commit suicide. And so that's what the whole and it's a great program. He's never had anybody go back in prison through the program. And so they're pushing it nationwide. That he's always in DC now and a bunch of other stuff. And it was nice to have him talk about it because I don't think people realize how much veterans commit suicide because of what they went through.
Yeah. Well, and the lack of talking about it. I mean, if you look back over the other wars that we've had, this is something that became more apparent, in like the last 50 years, but
it's always been there, except I would say the World War, the first one, that Normandy and all that, because we lost so many people. There wasn't that many people, I would say, veterans returning. Plus they came home on ships, which take 2 to 3 months, where we're home in a couple, in 12 hours or 16 hours, depending on what you're doing. And one of the talk in the thing was about the question that was asked, and it says, how many of those who commit suicide are combat veterans? And he's like, probably about 50%. He goes, but that you don't have to be in combat to get the PTSD. And he told a story how on the ship, because the Marines, they get travel with the Navy. Yeah. The people on the ship who help you get your stuff together, ready to go and whatever. One of the guys who's been helping one of his buddies forever they're doing that. They went out and he's the only one that came back. And that guy was like, where's so-and-so? And he told him, and he went to his birthing room and committed suicide.
Oh my gosh.
So it can happen to anybody.
Yeah.
But let's get on to the actual talking about veteran stuff.
The happy stuff.
Yeah. All right. So VA loans, best loan in town.
Yeah,
especially since it changed a couple of years ago, the Blue Water Act.
Well, go in depth on that, and then I'll tell you about my story.
All right, I will. I'm just that's ever since then it makes it to where it's not by county, it's so you have the conforming loan limit everywhere. That's the starting point, and then if it's over that, it's considered a jumbo. But still, a lot of places will go up to. According to VA, you can go up $2.5 million with no money down. But a lot of lenders will do about 1.5, and it just depends on who it is.
Yeah.
So it's a great program, and you can get, there is technically, if you look at TikToks all over the place and all the other stuff, there's people say VA doesn't have a down, a FICO score requirement. True, but if you have a 580, let's work on it for 30 days and get it to 620 because you get a much better rate.
Yeah,
but from 620 to 660, it doesn't really change much. But from once you go over 680, the rate is so much better.
Gotcha.
Anyway, so that's all I wanted. So it's a great program. If you have any questions on it, reach out to me. And if you're a veteran, reach out to me. I'll send you my book for free.
Awesome.
Anyway, what were your story you want to talk about?
Well, so you and I had talked, about making this more a veteran specific show, right?
Mm-hmm.
And then like 2 days later, I was at the grocery store, and a former tenant of mine at the apartments that I used to manage, I ran into her, and her husband is a combat vet. And so she was asking, hey, after our lease is up, we want to buy a house. Can you get VA loans accepted? Are they a good loan program? And I think that it's interesting that even in like the civilian population, or veteran spouse, stuff like that, that they still have this concept that like a VA loan is like something that most people aren't going to accept, and it's difficult, and it's got all these issues. And I'm always like, no, that's great.
Yeah. It's not like it used to be. The new loan is totally different. Plus, being in California, we have termite issues. The way it is now, a veteran can pay for the pest report and can pay for pest repairs. where prior to a while back, they couldn't do any of that.
Yeah.
So you had to have a pest report, it had to be clear. Well, now the veteran can negotiate with the seller and say, okay, I'll cover that. You know what I mean?
Yeah.
So, yeah.
Now, here's another scenario too, right? So going into it, knowing with VA, you have zero down. Obviously that doesn't mean you don't have any closing costs.
Right.
You
Most
know,
vets have a lot of money.
yeah. So all that does is that gives you even more of a competitive advantage, right? Because we're back to the multiple offer situation. So if you had acted like you were going to get an FHA loan and you saved that 3.5% and you had that cash, you could compete with other offers,
Yeah,
you know, if that was the issue. But I find that, you know, when you present someone with a VA loan, they heavily consider taking that offer as long as it's competing with the others.
You know, and I always explain that to when, you know, if anybody, when I talk to a listing agent or whatever, I'm like, you understand that the reason these people don't have to put a down payment down, or I should say us, is because of the fact that we signed on the line. That is our down payment. Going to war for our country, or signing up to go to war for our country, is our down payment for this program. This program is not like it used to be. People are still thinking this has all the old stuff that was from 10, 20 years ago, you know, non-allowables. I got to pay what's not allowed on. It's the same as a conventional, just with no money down. And but the only difference is you have to have a pest report done. Right. It doesn't mean we can't do a short form pest report, which just says there's no active pests. Are you following me there?
Yeah. I'm just wondering, because I've never filled one of those out yet. Are there pest?
You don't fill that out. That's done by the pest company. Yeah, you just call around and say, "Will you do the VA short form?"
Gotcha.
Some will go, "I can't do that," and you click and go to the next one, because they choose not to do it.
Yeah.
If VA only requires a short form pest report, that's all you need. So I tell people, go ahead and see what the issue is, and then see if they'll do a short form. And, you know, before you have them come out and do all the pest work, just call and ask, "Hey, will you do I can get the number, but most people know by the VA short form." And most of them will do it. Probably 8 out of 10 will do it.
Oh, that's good to know.
Yeah. So you just have to find it. Some don't want to, because they want to get that repair work. Others want to just help out.
Yeah. Speaking of repair work, man, I know the cost of lumber hasn't, you know, gone back to what it used to be, but
it's getting close.
Some of these estimates, man, are just wild.
Yeah. Well, that's because I always say a pest report is a loss leader. Like the grocery store, peas are only 24 cents today, which really costs us 50, but we're going to get people in the door, and then they're going to buy all this other stuff and we make more money on.
Yeah.
I always say the pest report is that, where this is what $75 or whatever the number it is. I don't know what the number is.
125.
Yeah, whatever it is. Don't quote me and yell at me. Because I just had a TikTok go viral on TikTok. And it was about manufactured homes. How if you want to do something different, buy a piece of land, put a manufactured home on there. Just don't put it on a permanent foundation. Then you only pay property tax on the land. That's how it is here in California. And it went viral, and people are like, "Well, you should have said this is only in California." I have no idea where it's going to be if it doesn't work in your state. Just check. Other people are like, what I'm getting at is, so I'm doing this little caveat because I didn't do it on that.
Gotcha.
And they're all like, "You should have said that." Not everybody, but some people. What are you going to do? But back to our whole thing about pests. Yeah, it's just it's a loss leader. They want to make money off of that. That's how they make their money, is off doing the repair. And I can't say that it's overpriced, but I've seen that some people said that I can get a different contractor and do a lot cheaper. But that's not my opinion. That's just what I heard.
Yeah. And I have a couple contractors that can do that, so.
Yeah, but I'm not knocking any pest companies saying they're trying to steal money from you or take advantage of you. I'm not saying that at all.
No, just some people see work and they say, "Oh, you know what? I got a supplier that I can get cheaper." And,
well, it's like every roofing company charges differently.
Right? Oh, for sure. Yeah.
I'm just saying, one is like 3 times the amount, and one is like exactly what it should be. Another one's a little bit higher. You never know. It just depends on where they can get their product from and other stuff. Sometimes they're cheaper, sometimes they're not.
Yeah, going back to VA loans,
we haven't left there, but anyway, go ahead.
Yeah. Well,
just playing around, dude.
No, I know. Anyway, if you're a veteran and you have that entitlement, definitely use it. Don't let someone talk you out of using it, because getting those loans or those offers accepted with VA loans is not hard. All it takes is a phone call and a little bit of education.
And what's nice about a VA loan, there's no mortgage insurance, right?
Yeah.
So if you go on if you had an FHA loan and you have a VA loan, you put down 3.5% on the FHA loan, that payment is going to be $300, whatever that mortgage insurance per month is, depending on the size of the loan, is going to be between 250 to 3 something more a month because of the mortgage insurance. With VA, you don't have any mortgage insurance. So you have principal, interest, taxes, and insurance. And then if you have HOA, you have HOA. I'm just saying, but that's what's best about a VA loan. There's none of that and it's a great program. If you talk to the sellers, right? If you talk to different people and say this, I know you have other offers, but what's nice about this is if in our area, what's FHA whatever the FHA max loan amount purchase price is, with VA, go a little above that. And then you're not competing with any FHA. You're only competing with conventional, right?
Yeah. Well, and the thing is too, when you get down to it, how many people dislike veterans, right? I haven't met many.
I know some.
Yeah.
Yeah. There are our enemies.
But I was going to say, if you're presenting offers,
Right.
and like I said, people want to see it's the same amount, but they're not going to be worried about, having a pest inspection on the contract if you're competing financially with it, right, with the rest of offers.
Well, and as long as the seller understands and the agent understands that it's a different loan these days. It's a totally different loan. They can pay for everything that a normal buyer could pay for. There's no exception.
Like you said, the non-allowables was kind of like the caveat back.
You charge 1% to cover all the non-allowables. No, we don't do that anymore.
Yeah,
that hasn't been done for years. But there has been some, and this is not knocking, but some banks who have done it the old way still.
Really?
Yeah, it's like, but then you when you do it the old way, it causes other problems. So don't do that.
That's not good when the financial institutions aren't up to date.
Well, it's, not all, I'm sure it's getting less and less, but a lot of people just don't know VA loans like other people know VA loans. We're veterans. We know the loan. You've used it. I have one.
Yeah.
And I know everything about it. And it's really not, it's nice about VA loans. It's not about debt to income ratios, right? So on other places like conventional, your max debt to income ratio for your mortgage and your other stuff is 50%, right? FHA is around 56, 59.6, depending on what it is, right around there. VA, I've had one done at 73%.
Wow.
What it is, they look at the amount of money that's left over, your extra disposable income afterwards is what they look at.
So if you have like no debt.
Right. So they look at that, and that's where it comes in. And that's why you can do more with a VA loan. I'm not saying that you can push yourself to where you can't afford the payment. There's other compensating factors, and that's why they look at it the way they look at it. So,
well, it's another thing too, for any veterans that are listening, your loan can be assumed. So I had a situation where someone had bought a house back in 2020 and the interest rate was 2.9%.
Mm-hmm.
Right. And so that was a big selling point, because this was a house that was definitely up there in price point, but that loan was assumable. So the only bummer is that if someone that's not a veteran assumes your loan, then you lose that entitlement.
Correct. I have a guy doing it. He's having his son assume his.
Oh, okay.
And he's going to rent from the son.
Interesting. Okay.
I don't know the diamond. He just asked me. I'm like, you just go through the current lender that you're going through.
Yeah.
I said, I'll take 30 to 40, at least probably 45 days for most places.
Yeah.
So, but if a veteran assumes it, then you get your entitlement back. And so they're trying to pass a thing through Congress and all the way through to where no matter who assumes it, you can get your entitlement back, but they're not going to do that. So, and I'm telling, by the time you guys get this approved, it'll be in place for the next downturn.
Yeah,
because we don't need it right now.
Yeah,
the biggest problem is unless they've bought recently, there's still too much equity, and the equity lines are just it's when it was like 5 or 6% interest rate, it made no sense to do it that way. I haven't looked lately because no one's come to me lately about it.
Gotcha.
Yeah, because I mean, right now rates are, we were going higher on 7%. Now we came back a little bit yesterday. We'll see where it is over the next couple of weeks.
Yeah, I was gonna say, man, you get the updates and you're just like, man, this thing is just up and down all around. It's high 6s, low 7s.
It's a high heart rate monitor. The sinus rhythm. That's what it does. My wife hates when I say that, but that's basically what it does.
Yeah.
So, but if you're the people who approach you and say, hey, when our lease is up, we want to do this. Well, the first thing they should do is talk to somebody and plan, because what if there's one or two things on their credit they need to deal with, and they wait till like, okay, 30 days from now we're going to get out of here. You need to check now, because I can do a soft pull which doesn't affect your FICO score at all. See what's going on, and you can go take care of those things.
Yeah.
And that's the best way to do it.
Great advice, man.
So reach out way before you're ready, meaning that if it's 6 months from now, do it now so we can work on those things and make your FICO score even better. Because even if you have a 660, and yes, we can do VA easily, but what if we just get rid of a couple things over the next couple months and you have a 720? That's a totally different, better rate. So anything above 680 is a better rate.
Yeah. And now, why is 680 the magic number?
It just freaking works out. I don't know.
Yeah.
It's just, that's what I've found.
That's what the FICO gods like. Huh?
Yeah. That's just what, when I put anything higher, it's about the same in there. When I play with the pricing, it doesn't make a difference, but I've seen it, right? Yeah. So, but I mean, that's different on it. And around the same thing on FHA, it's better at 680, but it's also better FHA a little bit higher than that.
Gotcha.
Conventional is, don't even think about it unless you're in the 700 something. I see all these posts out there and stuff. People go like, okay, well, conventional, you can do that at a 620. Yeah, if you're putting down 60%.
Oh, no kidding.
Well, the problem is it's just it's so costly. They went years and years ago. They went to risk-based pricing. Risk-based pricing means what's the loan amount, what's the FICO score, what's the risk of that loan going in default, and that's how they calculate the stuff. So if you have a 740 FICO score or greater, there's less risk in losing on that. But if you have a 640 FICO score or less, you're 17 times more likely to go in default.
Gotcha.
That's how they look at the things.
Yeah, 17 times more likely.
Yeah, that's huge.
And
that's why the rates are different. But people say you can get, yes, you technically can. And when I was doing refinances during the boom, I had one couple who had a really low FICO, and we did conventional, but it cost like $3,000 to get that rate. Today, that probably would cost $7,000.
Yeah. And
just because of the cost of that, absorbing those costs.
Well, now first time home buyers, but even, first time veteran home buyers, if you're a young vet and you're trying to live on basic income, you're
talking when you're in or not?
When you're in. Yeah.
Yeah.
You probably have, questionable credit because they barely pay you enough to survive. Right.
My son bought, let me just put this. My son bought his first house after 4 years in Alaska, came down to Washington. They had 700 plus FICO scores, and
that's good.
They used, so their BH to live off base, they're getting 2,300, and his payment was 2,700.
Nice.
So yeah, it cost them $300 basically.
Yeah.
Right. To buy this place. So why wouldn't you do that? And that's what we were running into today, is when you're buying homes now, it's about the 3 reasons you should be buying the house: building equity in your home, right, as an investment for your future; tax benefits, even though the programs for taxes right now, and talk to your tax advisors, everybody's different, but some people can still itemize that money and write that off. And then again, the third thing is basically you stabilize your payment for the future, right? You're down the road, your payment's not going to go up because it will only go down if you're, refinancing. Where prior to rates going up, everybody was like, it's cheaper than rent, I should just do it.
Yeah.
You follow me? Now it's the why, and it's been this way forever. We were just 2.5 years. Everybody was like, I should just do it because it's cheaper than rent.
Yeah.
And now it's okay. This is why you do it in the first place. And that's why people are not jumping on the bandwagon, because it was not so easy to do as what it should be.
Well, so I've been teaching that financial piece. Well, I should say I'm like hosting the financial piece, right? I'm not teaching it, but
you're the MC of it.
And we go through discussions at the end, right?
Right.
And this last week, man, we had a pretty lengthy discussion because it was baby step number 2, man, where you cut up your credit cards, right?
Mm-hmm.
And so you and I have talked about that quite a bit, but there was a big debate about FICO score, right? And how big deal, who needs it? And it's like, he's like, I don't know, man. It's a rock and a hard spot because you need one if you're going to be buying a house.
Mm-hmm. You need one for a car loan.
Yeah. And there was a friend there, and they're like, well, do you need a FICO score to get a loan, even if you have 20%?
Yep.
And I was like, yeah. And they're like, so I couldn't get a loan if I had the 20% down. I'm like, you have no way of proving to this person, that you have a way to pay them back. Right. I'm like, would you loan someone $500,000 if they had no history?
Yeah. but cut them up while you're paying them off, right? Be on time. You can always have them send you a new card.
Right. The idea is not to have credit card debt, but if you need,
I'm just saying, but you don't want to get rid of all your credit cards because then the history that you have. So keep the two biggest ones you have, right? Get rid of, cut the other ones up. I don't care. For now, cut them all up and do what you guys say, but you can't close them. If you close them, you lose that history. But you also have to look at what's more important to you. What are you trying to do? I say keep two that are the higher balances that you've had the longest. Get rid of the other ones. But put those two in ice. Freeze them.
That's advice I give, man. But one thing I was saying is like we're in a system where you got to play the game a little bit, right? Because say you said, okay, I'm cutting my credit cards, I'm canceling them, all my credit history goes away. You're never gonna get a loan. I don't see how most people are gonna be able to save up $500,000 to pay cash.
Not in California anyway.
Yeah. And while you're trying to save that money, the cost of housing is just going to go up and up.
Right. But it wasn't, it was different years and years ago when that university first started years and years ago. Things weren't as expensive and things didn't go up as fast as we are going up now. They go up 3 to 4% a year on an annualized basis. And then the average price probably was for a home was $60,000 to $80,000. Right. Yeah. Especially where they started that program. So it was not a big deal. In California, there's no way to save that much unless you got amazing jobs, right? Or this or that. I'm not saying you can't, because I've heard of some people doing it. But my biggest thing is you could always cut them up and then go get a couple secure credit cards once you get back on your feet, right? And then just go from there.
Yeah. The long story short is like, you got to have some credit history if you're going to buy a home.
And it's not a car loan. It's not the other stuff. It's the credit cards usage that give you your FICO score.
Yeah.
The best part of it. That's how you utilize it.
Now, once you have a mortgage, does that count towards your FICO score?
Yes, they do, but majority of your FICO score and building your FICO score up is going to come from credit card usage.
Gotcha.
As a mortgage is an installment loan. They know you're going to pay on and pay it off, and then it's gone. But a credit card, it's the utilization of it. Are you at 10%, 20%, 50%? You know what I mean? Of the limits, that kind of stuff.
It's. I mean, when you look at it, it's kind of a stacked deck, right? Because it's like, hey, we want to make sure you guys spend a lot of money and pay interest on this. That way, you can get your score up, so you can get a better rate to save some money.
Well, some people could think it's a conspiracy, but then you can go back to in college, the first credit cards you get, that's why they're on campuses, you keep forever.
Yeah.
But you can make a mistake and start over. I'm just saying, cut them up if that's the problem, and then go get 2 secure credit cards down the road that you can only, here's $500 and here's $500. That's a max you can put on there, but don't put anything over $100. Just put gas on it and that's it. Pay it off. Then you have no way of utilizing stuff.
Yeah. Well, it takes self-control too, right?
That's the thing is it's AA, right? It's like Alcoholics Anonymous. Some people have a problem with alcohol. Other people don't. If you have a problem with alcohol, then cut it up and you can't, it's different. Same thing here, or drugs or whatever. Same thing here. Your credit cards could be considered a drug for some people, right?
Yeah.
And some people, use their credit cards and for businesses, other purposes and doing fine. And then the economy crashes. You never know why it happened. Don't judge it. Just get through it. Move on.
Yeah.
No judgment over here.
Which, by the way, financial peace. The class is still going on for another 7 weeks, so it's never too late to jump in. So
reach out to Bobby. Your phone number's covered there.
209-550-1087.
Next time, put it down below, because I'm sorry. I had to put that little thing there.
That's
so it wasn't in my face. All right. And I'm at Parcaut everywhere. And we want to thank you for watching. We're going to be here every week, Tuesdays and Thursdays. And we're going to talk about veterans loans and how to get one and maybe some other benefit potential stuff.
Yeah.
All right. Make it a great day. Thanks for being here. And Bobby, thanks for being here.
Thank you, Ed.